Luckin Coffee is trending as investors increasingly coalesce around the view that the company may be entering a new, more profitable phase of its growth story. A major catalyst driving the discussion is evidence that intense price competition in China's coffee market is easing, particularly after a key rival signaled an end to its ultra aggressive discounting strategy. For Luckin, which spent much of the past year balancing rapid expansion with defensive pricing, this shift is widely seen as a potential turning point that could translate directly into higher store level margins, stronger operating leverage, and accelerating bottom line growth. At the same time, community members continue to point to Luckin's relentless store expansion as proof that demand remains robust despite macro uncertainty. The company is opening thousands of new locations annually across China, while also pushing deeper into international markets in Southeast Asia and beyond. Bulls argue that this combination of scale, localized supply chains, and a tech enabled ordering ecosystem gives Luckin a structural cost advantage over many competitors, positioning it to capture incremental market share as weaker players pull back. Valuation has become a central theme in the conversation. Many investors believe Luckin remains significantly undervalued relative to global peers such as Starbucks and other fast growing consumer brands, especially when considering its revenue growth rate, expanding customer base, and improving profitability profile. Some see the stock's current pricing as still reflecting legacy skepticism from past controversies rather than today's operational reality, creating what they view as a long term mispricing opportunity. Another layer fueling optimism is news around Centurium Capital's ownership consolidation, which is being interpreted by some as a step towards simplifying Luckin's corporate structure and improving governance optics. This has reignited speculation about a potential uplisting to a major US exchange, such as NASDAQ, a move that many believe could unlock broader institutional ownership, improve liquidity, and serve as a powerful re rating catalyst for the shares. Overall, sentiment across the community leans cautiously bullish. Investors see a convergence of easing competitive pressure, expanding margins, global footprint growth, and corporate housekeeping as setting the stage for a re-acceleration in earnings power. While skeptics still warn that execution risks remain and competition in China is never truly benign, the prevailing narrative is that Luckin is evolving from a pure growth at all costs story into a scaled, profitable global coffee challenger with multiple potential catalysts ahead.
So the stock has been showing a decent amount of strength within a longer term neutral to bullish trend. Yesterday again that 2.02%. It was quite a big day. 50-day average is around 1.89 million shares and it exchanged at 5.69 million shares. Yeah, since the 29th of January has just been printing high prices apart from which day was that? Apart from Thursday the 5th, apart from, yeah, that's the only day it lost. Since that time, you do the maths. Yeah, how many days that was that? 29th was Thursday. That's to 7 days, six out of past six high days out of 7 days, seven trading days. That's quite decent. So the extrapolation we have on this daily chart is saying that it may contract this expansion it has shown. It's saying here it may contract it towards all the way towards let's see, let's it seems it may contract it all the way towards the 4th of March. Let's see, early March it seems, and then we might yeah, early, yeah, towards the 23rd of February. Then from then on we might see a consolidation towards 12th of March. After that, it seems the uptrend may resume. So it's just saying that it's going to contract and consolidate below its 40-day moving average. That moving average will position itself to prevent any expansion during that time. Projections are currently saying 36.35. It's a downward projection, but it has previous upper projections. We have the highs of around 39.29. Yeah, 39.29. This was as of 39.29 was as of the 10th of December, but a day after we had, yeah, let me see, a day after we had up to 40.95 for 3.09 for 4.41. So we have been able to gather the data from on this daily chart, and we have been able to break it down on Claude. So the price pressure momentums, they tell us the appreciation or depreciation of the various moving averages. You can see here we have the 10-day moving average for ppm 1, ppm 2, 21-day, ppm 3 for 40-day, and then ppm 200 is for the 200-day moving average, which underscores its underlying trend. Okay, so on the 10-day moving average, it's gaining $1.17 every day. Strong trend mode. Trend mode is from 0.25. Derivatives are all accelerating and positive. Okay, second derivative is negative, deceleration warning. The 21-day, 0.52 trend mode, weakening momentum, first and second. First is positive, second is negative, and the 40-day is negative 0.2, bearish to neutral. I think it's still it's going to it probably was worse than this before, obviously, given that the stock has printed six has been in a strong trend since the last strong bullish trend since the last seven trading sessions. So yeah, and then the 200-day moving average still just neutral. You can see neutral but stabilizing. Key inference: short-term momentum is strong, but showing early deceleration signals. The divergence between ppm 1 bullish and ppm 3 bearish suggests a near-term consolidation risk after the recent rally. Okay, I would even say, well, yeah, yes. I mean, it's logical. That's pretty much logical. Yes, it sets seven days of strength, 7 days of strength. Yeah, it won't be out of place to expect a consolidation, which is what we saw. I showed you that as well. But it's not. It's expected. It's not coming anytime. It's not saying. It's not saying. It's not indicating that it's coming anytime soon. It's more of a contraction first, then consolidation, based on the extrapolation. So the market grid also gives us a range of possible prices. Okay, RXT is the top of the grid, and then XXT, not in this chart, is the bottom of the grid. As it accelerates towards the R values, take profit taking opportunity continues to diminish. Yeah, it improves your as the case may be. Let's just say your gains will continue to increase, but also your opportunity to exit continues to diminish. As you continue to decelerate, as you continues to decline, your losses increase, and also the opportunity to buy the dip also improves. So these are the prices they represent, and these are the probabilities of them being retested. So S3 is at the bottom. Okay, so RXT is at the top. SXT, not indicated here, is at the bottom of S3. Okay, yeah. So most probable near-term range is between 36.29 and 37.60. Yeah, that's right around where it is right now. Okay, trade setup. Not This is not a recommendation at all. If you implement this, you may run into losses. Okay, mean reversion scalp with defined risk. Okay, so yeah, this is expecting that a pullback will happen. Your primary will be 36.2 to 36.5. Aggressive will be 37.4, right around where it is right now. Probability of success is at 8%. That will be 37.6, 37.8, and then stop loss will be 35.70. Okay, this is not a pullback. This is yeah. In case it does pull back, if it does pull back, yes, then But this is just for trading mostly, because these gains are tiny. Let's see now, probability of success and all that. Combined probability of probable profitable trade is 37%. Why this works? ppm 2 ppm, that's the appreciation of its 21-day moving average, the derivatives that suggest imminent consolidation. Okay, the moving average clustered around 34.09 and towards the 34.34 provides a strong support magnets, but the S1 should hold on a first test, given bullish fundamentals. Okay, let's see. That S1 is what? Let's see what that S1 is. S1 is 36.29. High probability of any pullback, 70%. Okay. Okay. Long-term setup between 2 to 6 months. Accumulation into structural breakouts. Thesis: if price and discipline holds in Chinese coffee market, Luckin's margin expansion creates a fundamental re-rating opportunity. Technical base building above 34 to $36 zone sets up a breakout structure. Entry strategy: 35 to 35.5 to 36.5, scaling over 2 to 4 weeks, okay, and much more. Yeah. Targets will be 40.5 to $42, $44 to $46. Fibonacci extension, okay, 45% probability. Measured move from base, 22% probability. Stop loss, daily close below 33.5 invalidates the base, okay. The ppm 200 must flip positive, currently at 0. Is positive, yeah, it needs to be above 0.15, okay, to begin, yeah. And then the ppm 3 reversal from negative to positive, yeah. Volume confirmation on rxt at 8.49 break, okay. So if volume is confirmed above the if volume is confirmed with the at a break above that 8.49, then that's part of the whole metrics. Probability pathway: 70%, 2% chance of entry filling accumulation zone, 45% chance of reaching $40 plus if entry is execute. Expect plus 28%, 0.72 times 0.45 times 88% gain from 35.50. Critical decision points: bullish continuation signals, daily close above 38.007 with volume, ppm 1 second derivative reverses positive, ppm 3 crosses 0.00. Okay. Bearish invalidation, break below 35.35, ppm 1 drops below 0.5, negative earning slash China macro surprise. Optimal risk management, size short-term trades, okay, and much more. Yeah, okay, yeah, just see what you make of LKNCY, and thank you very much for watching this video.